Hi, my name is Deon Rebello, and this is a Bullion Vault. Willem, how you doing?
Well, in yourself, Dion.
Very good. So this is episode 47, and it is our second podcast for the year, 2026. My word, we've gone from absolute highs in bullion, gold reaching over $5,500 an ounce, silver going over the $120 an ounce, and now there's been these massive pullbacks, and there's been quite a bit of lateral movement. What is going on?
It was quite funny actually because last time we were sitting here we were talking about silver breaching 100 and gold reaching 500, and when's that gonna happen? And I don't think it was we had reached the end of the week yet, and there it was. It was an absolute scorcher of a rise, and yeah, followed by quite a bit of a pullback.
Well, the commentators who are not favorable to precious metals, of course, said this is the collapse. It's, downhill spiral from this point, and then slowly, after that massive drop, and let's qualify the drop in silver, especially. I mean, there hasn't been a greater drop since 1981 in silver in percentage drop.
That's true, but the funny thing is, it's still up since the start of the year. Um, and this is why I always said, don't panic. It's as simple as that. Yes, silver had a massive, massive drop. I mean, it was up to over $121 an ounce, and it then has pulled back. It's now, I think, sort of searching for a new foundation, and it came down. It actually dropped, I think, to $65 an ounce at one point. It then went back up to 80, and it's sort of sitting high 70s at the moment. As I said, it's searching for its place right now. Gold is over $5,000, and had you panicked, sold when silver hit 70, you'd be down again. So that's the main thing: is don't panic when you see big drops like this. There's still a massive shortage of silver in the world. There's still a massive demand for silver in the world. It's going to go back up at some point. And the other thing we need to look at is pretty much everything that happened on that day. We saw Bitcoin losing $11,000 per Bitcoin. We saw literally the entire stock market go red. It was um, it wasn't just limited to gold, silver, and platinum. It was across the board. Everything happened, and it was around about the same time that Donald Trump announced his new pick for Fed chairman, which is Warsh, and the dollar strengthened as well. It was it's a big
Yeah.
sort of convoluted happening going on there.
What's interesting, and again, this also leans towards any market correction of some sort. I mean, that was a massive correction of some sort. Even if we had to have a complete market crash, you can expect gold, silver, and platinum to crash also. The difference is how they rebound back, and that's always going to be the case. The fact that gold holds safe haven status will mean, also with its reserve bank holdings globally, it will then start to build back to where it was or close in there and thereabout. Same with silver. The demand versus supply has still been at a deficit, and that has not changed. Even now, even with our own markets, there's a massive demand for the physical, and yet the supply is still lagging. So that will keep the prices elevated. Where it's sitting at right now, around 77 odd dollars an ounce. I do foresee that it's going to be quite lateral over the next period of time. Do we see another run in silver this year? Absolutely. And again, I do believe we will see silver breach the $150 mark at some point. I've said probably mid year, probably around June to probably around September, which is the European summer, which generally is when we have those next big moves, and then of course running towards the end of the year.
Yeah, I think the thing that people need to remember is that these are all finite resources. It's not like Bitcoin where you can string a bunch of computers together and mine up some more. Um, or, it's not artificial like the stock market. It's finite tangible resources. You can only mine so much. There's a cost associated with mining it, and that cost is also driving the supply and demand. We don't sit with just infinite silver that can be grabbed as we need it. We don't sit with infinite gold. And that's what is keeping these prices up. That is what's keeping the value of these precious metals up. That's why they're precious. They are rare. Um, and the fact that there is such a massive deficit, I mean, we looked at this last time we were sitting here speaking, as 95 million ounce shortage projected for 2025, 2026, 820 million ounces in deficit from 2021 to 2025. You know, that's not something that's just going to go away, and it's not something that's going to keep the price or get the price to actually go down. It's going to keep that price up, and as I said earlier, we still up from where we started this year.
Yeah, what's interesting, I was reading an article from Goldman Sachs where they were saying that they predict, and I love these predictions. So they're saying around 75 to $85 an ounce. And they fear that if silver does breach the 90 and over $100 an ounce, that it would affect the use of silver in both EVs and solar panels. And I get what they're saying, but as you're still highlighting a massive point, is there's a massive deficit, and that demand is still there. Are they going to look for alternative other metals that could give silver or utilize the characteristics that silver offers? Probably, but we do know that silver has the highest heat and electrical conductivity bar any metal. So to find something that's better is also not going to just be a quick fix.
No, definitely not. And I mean, as with everything, it's not a case of, okay, we're just using this instead. There's research that needs to happen, there's production that needs to be adapted, there's the full rollout that needs to happen. And, you know, somebody who's just finished building a solar photovoltaic panel production plant isn't going to be very happy or willing to say, okay, now we need to retool the whole plant to use something else, something that is probably going to be less efficient.
Yeah.
And same thing with your electric vehicles. It's not as easy as just rip and replace. I mean, think about when the US started going around saying Huawei needs to be removed from all networks across Europe, and a lot of people agreed, and it still hasn't fully happened.
Yeah.
It's still in there. It's not as easy as it seems to simply switch over to something new, and it's across the board. It's in production, it's in your green technology, it's in your Wi-Fi networks. It's not that easy.
And again, it does speak to its industrial mind. It does speak to the fact that its characteristics meet that. We had a similar thing with platinum and palladium, where initially platinum was the number one supplier within the autocatalytic converters within cars. And platinum then rose to that over $2,800 an ounce, and then there was a massive crash. There's a switch across to palladium. Then palladium then went and ran to over, I think it was over $3,300 at the time. And then it came down, and there's been a move back to platinum. That's fine. It's similar characteristics, but again, what I foresee here is they're going to become more efficient with the technology. You got to use silver. You got to find alternatives. However, silver is still the best metal for what they're utilizing. Therefore, it's a technology shift in how you utilize the metal.
Definitely. But I mean, coming back to your example of the platinum palladium shift in your autocatalytic converters, if you look at the diesel engines, they burn hotter, so the gas is coming from the engine is hotter. And palladium couldn't handle those heats, so they still had to stick to platinum.
Right.
You know, and once again, if we look at more green technology, if we look at your hydrogen fuel cells, they've been doing so much research into finding an alternative for platinum in as a catalyst in those fuel cells, and they're still nowhere near reaching anything that works as well as platinum. So it's easy to say, oh, we need to find some alternative, but as with the catalytic,
Catalytic,
the
yes.
catalytic converters, on diesel, they still need to use platinum, even though palladium is used as a substitute on your petrol engines. They might find something that works almost as well as silver, but in some cases, there's gonna be situations where you just can't replace it.
So on the Goldman Sachs scenario, where they're saying that if silver goes to back to those volumes, it's not sustainable. Yeah, we get it. It is a finite metal. But what it's going to have to force is the sector to become more efficient in utilizing silver technology. And that's what's going to happen. The fact is, will we see silver breach the $100 mark? As I've said, I do believe we will see $150 being broken this year. It's very much on the cards based on the simple fundamentals that silver is in still massive deficit. And as you spoke, since 2020 until now, it's remained as a deficit in supply versus demand.
Definitely, and as we've been saying, it's not just investment and jewelry where the demand comes from. It comes from actual industrial applications, and that is the big thing here. You know, energy generation, electrical generation from your solar panels, even your wind turbines use silver bearings and bushings. It's literally everything, almost every part of technology coming out these days is touched by silver.
Well, again, second to oil, it's the most used commodity on the planet.
Definitely. And platinum, I mean, we see a similar thing. I don't think its drop was as bad as silver, um, but we're sitting with a similar case there. We've got a massive deficit over the past however many years, and we are responsible for the production of most of the platinum in the world.
Yes, and I was going to raise that, but carry on.
So, yeah, as a country, we've got our own challenges here in South Africa, and it is a bit of a problem sometimes, and that does impact the actual production of platinum. So there is this deficit. There's a very strong industrial demand. There is an increase even in jewelry and investment demand. So we've seen the prices go up. I mean, massively this year. It's once again, I think it's still up since the beginning of the year. Same with gold, sitting at over 5,000. I mean, if I take a quick look where we are right now, yeah, it's just above 5,000 for gold, and we're sitting at 2,030 for platinum. So that's slightly down since the start of the year. But the fact that we've seen this absolute, some would say, catastrophic collapse of the precious metals, and they're still up on where they started the year for most of them,
Yeah.
is something to actually just be in awe of.
Well, again, it speaks to the demand, and this is what I've always said: is if the real fundamentals weren't correct, it would have fallen and continue to fall. However, the fact is the demand is still there. It still underlies it completely. Again, another article I read where the gold has surpassed the dollar within Reserve Bank holdings right now. I mean, that's one of the first times that it's actually happened where they're utilizing gold in the form of protecting their wealth and the debt that the US dollar then carries and holds.
Definitely. I mean, we've seen record buying from central banks over 2025. They were buying gold in absolutely insane amounts. And there's talks of Europe wanting to repatriate its gold from the US, from Fort Knox back to Europe. So, you know, I think there's a global sort of mind shift happening where they see the value of actually having your own physical gold in your hand. It's as simple as that. And that's the same thing with private owners. It's a tangible asset. You can have it, you can hold it in your hand. It's not a piece of paper sitting somewhere and at the whim of somebody or a group of somebodies, it can be destroyed and mean absolutely nothing.
Well, that's your third party risk. So, again, and this is where stocks come into play, and this is where that uncertainty is really played up, is holding a physical commodity. You're not hedging against the growth in that commodity. You're actually holding the physical. And as the paper derivative moves up and down, if there's a complete crash in the market, you still hold the physical value of it. And what's interesting, I mean, JP Morgan, they also came out with renewed forecasts for gold this year. And they're talking of gold going to the highs of, they've been quite bullish here, about over $8,500 an ounce. They do believe that we'll finish the year on around $6,300. I mean, that is exceptionally bullish. But again, it speaks to a lot of what you've just raised. We look at the central bank buying. We look at the demand across the board. The fact that central banks are holding more gold versus the actual holding of dollars speaks to a world that is very uncertain right now. The fact that Donald Trump makes an announcement that he is removing Powell from the Reserve Bank in the US, the Fed, and now suddenly putting somebody that he believes is the right man, and it sends the markets in a complete flutter and crash across the board. That speaks to uncertainty that we've gone on about. We talk about the wars across the planet, a lot of uncertainty with all of that. And just like a comment like that, an announcement like that will set things off. And as you saw it crash like that, you can see it another way. China has to just invade Taiwan, and I can tell you gold would shoot to $8,000 within days of that happening. Not to say that it will, but we do know there is a lot of uncertainty right now geopolitically, and it's not just central isolated; it's across the globe.
Definitely, it's you know, sort of intercontinental. It's the US, it's Europe sitting, and there's this sort of not animosity, this sort of uncertainty between the two, this uneasy tension all the time. And then we've got China, who's busy absolutely barnstorming with their economy. They are producing, they are innovating, they are really coming up. We right next to them, we've got Russia, who's been at war with Ukraine for how many years, and then it's just the entire world is kind of turned on its head right now. And as we've said before, when that happens, people tend to flee towards gold for that certainty, for that safe haven asset. We don't know what's going to happen with the US dollar over the next year, over the next 2, 3 years. It might come out quite unscathed, but it might have a massive collapse as well. It's just how is all of this going to be resolved? And the thing about money is, I think the average lifespan of a fiat currency is 20 years, while gold has been used as a form of currency for over 5,000, basically since humans began trading.
Yeah, what's interesting, and I've been quite a follower of him for a number of years, is old Ray Dalio. And he speaks about if you look at history, you can kind of project. And I know Mike Maloney also has always said that, and he utilizes or uses the famous Winston Churchill quote in order to see the future. And I'm paraphrasing here. You got to look back into our past, and you will see a very clear trend of what's to come. And Ray Dalio, I mean, he's done it across the board. And what I will do is I'll actually share the link an interview that he did on the Stephen Bartlett Diary of a CEO, where he actually chats about the world, the uncertainty, and all of that, and how it's projected to happen again. And essentially, what I'm really talking about here is the dethroning of the dollar and the U.S. economy as the reserve currency and the dominant country that dictates. Because we know he who has the power creates the rules. And we have seen that power shift, and we're seeing it happening right now in front of us. Where China, if you look at where they were 50 years ago to where they are now, is in a complete different place. They've had a whole movement of a middle class that has grown substantially, that is now consuming, all of the middle class requirements. Fancier foods, fancier drinks, fancier this, requirement for bigger, better, and cars and vehicles, and all across the board, houses. And this is what is coming. And what's interesting is Ray talks about this, and he talks about the changing of God. And that is also what's at play here. Of course, America, with the Trump administration, are trying to look at ways to try mitigate a lot of this. And of course, we know that as far as foreign policy, it's been very aggressive and very we know with all the tariffs what happened last year, where he did unilateral cuts across the board, and if you're not with us, you're against us behavior. And suddenly there was pullbacks. China said, really? And they said, okay, well, let's have a chat. And of course, the smaller emerging markets like South Africa, like a lot of the developing markets or countries, they had to literally come with a begging bowl and say, okay, well, we're prepared to do this, we're prepared to do that. But again, it speaks to this change. And this is where, and that's why I still fundamentally believe that what we are in is a period of time that is of massive change and transition. Be it with a changing of reserve currency, we know that there's talk of a currency be developed that is hedged to gold. We know that there's talk of massive market corrections or depressions that are on the card due to the valued markets, especially in the US. We also know that there are a lot of these issues that are going on right now. And how does the world get through this? And again, this speaks to the fundamentals of gold remaining a reserve demand across the board.
Yeah, and I think one of the most important things to note is that, we were talking about he who has the money makes the rules. And I think a lot of the world has seen suddenly that it can be misused. It can very, very easily be turned against you if you buy into that too deeply. And because of that, there has been sort of this mindset shift but hang on, if the USA can do that to Russia, if the USA can do that to whoever they like, they can do it to us.
Of course.
We might not be on the bad side at the moment, but we never know. Maybe sometime in the future we will be, and suddenly they're going to use those same tactics against us, which is something that you can't do with gold.
Yeah.
And that is why the central banks have been buying up so much gold.
But again, and this is what I rambled on for the last couple of minutes about, is that we live in uncertain times. Period. There is a lot of uncertainty. And the fundamentals, and that's what we've been going on all along, is what do the fundamentals dictate? And right now, they continue to say that gold will remain strong. There is lateral movement right now. Does that mean that gold's growth is limited? No. The fact that JP Morgan has come out saying we will see $6,300, those are indications that they still agree on the fundamentals being in place for strong gold and, again, strong silver.
It's quite funny to me that JP Morgan is going so bullish on it, especially after last year where they went a little bit more conservative and had to revise it up 4 or 5 times during the year. See, now you can go, okay, well, we said it's going to be 8,600. We're only in November. We've still got a month to get there. And then at the end of the year say, Okay, well, we revised it down, but yeah, it's quite interesting to me.
Well, it's the same thing with the Goldman Sachs projections on silver. Is they saying that it will be between 75 and 85, but you can expect that if it goes over 100, that's going to affect the demand and supply and blah blah blah. Again, we spoke about this so many times last year where we personally had to revise our own projections. And it's not that we were the only, it was the market across the board. We're also baffled at this unprecedented growth that we were experiencing.
Well, let's be honest. I mean, did anybody see $121 for an ounce of silver in January?
No.
I can tell you no. Your biggest, brightest minds, your best analysts did not see that. So, it's that's how unpredictable it is. That's how difficult it is to actually pinpoint where this is going. It's we've got people who spend their lives who are being paid good money to figure this out, to predict this, and they're getting it wrong.
Yeah. And again, this is where we are right now. So, also what was quite interesting is you mentioned platinum. Now, platinum was one of the top performers. I think in percentage over the last quarter outperformed all the other precious metals. Now, as we look and it's sitting just over $2,000 an ounce, and it was really looking strong. Now, people will say, "Oh, it's done." There's a shift away, and again, we've spoken about it that the demand for platinum, especially within the hydrogen economy, is still there. There is definite will continue to be growth in it, and it's interesting to see when these do start to kick on again.
This is the thing about platinum. It's not just the hydrogen and the green energy fields that we need to look at it. One of the uses of platinum is actually in electronics to make hard drives.
Yeah.
And with the boom in data centers that we've seen over the last year, over the last 2 years or so, those hard drives have become more and more in demand, and more platinum is required to make them. Now, in addition to that, it's used in chemical manufacturing, it's used in energy, it's used as jewelry. It's literally a very, very versatile metal, and that's why I think people looking at it and saying, "Oh, it's done." Not at the moment, especially not with the drive towards these data centers and the demand for increased storage across the world.
Do you think the growth in AI and why I mention this is my now 20-year-old daughter who had I'd brag to her how much I'm using AI as far as it's such a great business tool. I can drive and dictate email and it literally will put it into the correct order, and I think it's fabulous, and copy and paste and fire away, and it's making my life better. And she turns and says, "But do you understand that AI, the demand upon electricity and power and all these things has become more? Is this also not where it's also now affecting that, where the demand for holding and processing has a knock-on effect from AI?"
Definitely. I mean, it's clear that the demand of AI, and honestly, I don't think it's going to last. I'll be dead honest. I don't think it's going to last. It's not. I don't think it's the absolute breakthrough and genius cure all that everybody makes it out to be. I think it's a bit of a bubble at the moment. And I mean, we've seen demand for graphics cards, for computers, for RAM, supply drying up, prices shooting through the roof. Um, it's a drain on literally every resource we have at the moment. That's my personal opinion on AI. It's draining resources, and it's giving you a bit more sophisticated Google. It's just my take on it. I'm not a big
Well,
fan.
I see you kind of smashing my bubble here because I look at AI, and we've used it even in our own business where we've been developing new coins. We've done the pangolin, we've done the wild dog, we're busy with the penguin, and the Cape Penguin, and then of course the Nice Seahorse, and then we're going to finish the series off, which we will do over this next couple of months, is the geometric tortoise, which is also endemic to the southern African region, especially around that Knysna and eastern Western Cape area. That said, is we worked with a graphic artist who is qualified with a degree in fine arts, who daytime job is a tattoo artist, who she is amazing. Yet she told us in order to refine what we were looking for as far as design and layouts is you use AI. And you know this journey where we'd plug it in and it would come out with a good ideas. Some of them were very faint, like almost comical in look. But what it did is also narrowed that time down to where we would have probably spent a lot more money researching and developing a concept where it was literally narrowed down into a couple of hours.
True, but we got a concept which I then further worked on and was finalized by our artist on paper with a pencil.
Yes,
Yeah.
we can say that we specifically wanted that because what we've seen is from a design perspective is we didn't want that AI feel to it. We didn't want it to be look as a computer generated image. We wanted it to be a drawn image because that's what from the design perspective of what we're looking for, that's what we wanted. But who's to say that we could have completely done it in AI? To me, I've seen the growth in AI, and especially over the last 8 to 6 months, where from a business perspective, I've seen the uses have just been exponential. Again, I know we kind of deviating off the topic here, but it is something to consider that there is this demand, and again, is a blip and it's going to be short-lived, and we'll have this drop down, as you say, it's a bubble, and there will be some form of correction, or will it continue to grow to the and now I'm smiling because I'm thinking of Terminator and Sky, where we all then become batteries, and now I'm really going off topic.
Well, it's fun to think about those things. But I mean, how far is it gonna go? Pretty much everything you've already said is we use it as a tool, and then humans take over and finish the job. It's and I think that's the thing. It's one of these things that people sort of think that it's going to take over, it's going to do everything, but I think we already sort of there's been massive advancements in it, but I think we're already sort of starting to push the envelope on where it can go in its current form. Because let's face it, it's not really AI. It's just a sort of computational model more than anything else. It's an
Algorithm,
algorithm. It's
yeah.
not true AI. It doesn't actually think.
No.
Um, but I think yes, there is going to be a place for it, but what we saw a few with the tech boom and the tech bubble a while ago. There were all these startups, these $1 million startups, and people were pumping in
Trillion
money.
dollar or
Trillion,
billion
billion
dollar,
dollar
yeah.
startups, and people were pumping money into it, and there was heavy investing. And then suddenly everybody realized, oh, hang on, this isn't as useful as we thought it was. It can't actually really do anything. We don't know what we were expecting it to do, but it can't really do anything. And the whole thing came crashing down. I see us heading towards the same thing with AI when people realize, okay, so this is what we can do with it. That's useful, but that's kind of it.
Well, it's interesting. I think finishing off on today's podcast, it's food for thought, and I know you are very tech savvy, and I'm not. So I will take your point, and I'll take my daughter's point. Who she was very stern about it. That we don't know the energy consumptions and all these things that are being
Well,
taken from us.
see, this is the thing. They are actually building solar plants. They are building power plants to drive these data centers, and that's the thing. They are creating the energy needed for this, but it's taking resources.
And it's utilizing silver and platinum and gold to a degree. The instability remains in favor of gold. And same with the global demand from an industrial perspective on both silver and platinum. It's still there. And again, I don't believe it's going to change too soon. Over the next couple of months, I do believe we will see a kind of that, and I've spoken of it before, that recoiling, that building up, creating that tension, and then we'll see the next big jump, next big move. And yes, I do foresee that probably by mid-year we're going to start to break the $100 mark, and we're going to start to see it charging towards 150 silver. Gold, it's interesting. I mean, it's got to 5,500. It's that mental barrier has been broken. We now will know that $600 is not that far off, and or $6,000 is not that far off, and then 6,500 is in arm's reach.
No, I think we've already had a sort of a test to see how far it can go, and I don't have much doubt in my mind that we're going to see those same levels again this year.
Willem, in closing, any final thoughts?
Well, it's been an interesting week or two, or month or two. We we 2 months into 2026, and already we've had this roller coaster. Um, yeah, I think we just need to sort of stay on top of this and keep watching the markets. And if you want to stay on top of this, hit the like button and be sure to subscribe.
Thanks, Willem. Take care. Bye bye.